Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Asian markets open in the red after US President Donald Trump says he would prefer to wait for next year's presidential elections to be over before signing a deal with China. Rating agency Standard & Poor's has reaffirmed India's sovereign rating at BBB, along with retaining the stable outlook. The government looks to review the GST compensation cess as well as the rates in order to boost revenue from indirect taxes, according to a government official. Suraksha Realty along with NBCC offer more land parcels to lenders in the final round of bidding for JP Infratech through the insolvency process. And CSB Bank will be listing on the bourses today. The IPO was subscribed, remember, 87 times. Now, it was the third day of losses for the US markets, with the Dow Jones dropping over 1%. The US President Donald Trump said that a trade deal with China may not get done anytime soon, and that's what's had a bearing on those markets. Abigail Doolittle of Bloomberg News wraps up Tuesday's Wall Street action in this report.
Tuesday turned out to be a risk-off day for Wall Street, with stocks selling off and haven bonds rallying. But at the end of the day, it wasn't as bad as it had been at certain points of the day. At the lows, the S&P 500 and the NASDAQ down about 1.4%. At the end of the day, though, down just a little more than 0.5%. The Dow, though, underperformed, down about 1%. And the true underperformance came from the SOX, or that Philadelphia Semiconductor Index, finishing down about 1.5%, down 3 days in a row. The worst stretch for the chip sector going back to August. That's important because it tells you that this is all about trade. That sector especially sensitive to trade, given the fact that so many of the chip companies receive revenue from China and the Asian area, plus the supply chain for the chips deeply embedded in China. So really a bit of a barometer for the trade war via the financial markets, and a one-year chart would show you a beautiful uptrend. But each time this year when we've had trade scuffles in May and August, late September and early October, we see a dip, but then the buyers step in. It's unclear whether or not that's going to happen this time, and certainly the SOX down 3 days in a row. Now, tied into that idea of the trade war really affecting some of the technology companies, Apple down in a big way at the lows, down 3%. At that point, on pace for its worst day since August, and they received 20% of their revenue from China. Their supply chain, many of those chips companies in Asia, in China. So concerns that if a trade deal is not reached between the U.S. and China in 2019, it could hurt Apple and the entire Apple complex. But trade extended to Europe, too. We had some of the French luxury goods makers, those companies trading lower, including LVMH, along with Hermes, Christian Dior. This, as President Trump has proposed tariffs of up to 100% on $2.4 billion of goods. So we saw a bit of a sell-off there, and that extended into some of the U.S. names, too, especially Tapestry, the old Coach. Those shares down more than 4%. Tiffany seeming a little bit more insulated, considering that LVMH is acquiring that company. It'll be interesting to see whether or not the trade war could derail that at all. And then finally, again, confirming that it was risk off with stocks selling off, haven bonds rallying. So Tuesday's Wall Street session did have that risk off tone. From New York, Abigail Doolittle, Bloomberg News.
All right, Asian markets have started the week, they didn't start the week very well. In fact, they continue to do badly as we stand as of now, with the markets that have opened up so far all trading in the red after the updates that we got over the evening. Now, let me go live to Rosalind Chin, who's joining us in the Bloomberg studios in Hong Kong. Thanks so much for joining me, Rosalind. Not looking very good after those updates on the trade war.
You're right. So first, we did have Donald Trump saying that he didn't have a deadline to sign any kind of deal, phase one or otherwise. So, of course, that has investors worried because they're already jittery anyway. That's of course, indicates that the December 15th tariff hike on Chinese imports into the U.S. Is likely to go ahead. So we've had the MSCI Asia Pacific losing about 2/3 of 1%. But then there's also more tensions on these geopolitical issues, with the U.S. House approving a bill that would impose sanctions on Chinese officials over human rights abuses abuses against Muslim minorities. And so that, of course, adding an extra layer of tension to the relationship between the US and China. Investors, of course, we're seeing a lot of investors piling into havens, money starting to go that way after we thought a few days of risk on sentiment. So right now we see the yen currently at a 108.56. Gold futures are at 1,477.53. And in terms of the stock markets, the Nikkei is losing more than 1%. The Topix losing also 0.5%. Shanghai Composite down by about 1/3 of 1%. CSI 300 also losing over 1/4 of 1%. Hong Kong's Hang Seng now down by 0.9%. Now, we did have some numbers out from Hong Kong earlier today. The PMI reading, pretty dire, lowest reading since April 2003, which, of course, if you remember, was when Hong Kong really started grappling with the concerns about SARS. So this number for PMI does signal that the fourth quarter GDP is going to be pretty ugly, a pretty big contraction expected there. And, of course, all this is largely due to the protests that have been ongoing in Hong Kong, also the trade issues that have been ongoing globally, retail and property really hard hit here in Hong Kong. So the Hang Seng Index now losing about 0.9%. Finally, Australia, the S&P ASX 200 losing more than 1 1/3% right now. Bonds tracking treasuries higher. The Aussie dollar, we saw that dipping slightly after these numbers we got on third quarter GDP, showing that they came in less than expected. And largely it's because consumers are not opening their wallets. Household spending has not really taken off, this despite tax cuts over the year. We also saw GDP growing 0.4% quarter on quarter. The previous quarter, though, was revised higher to 0.6%. RBA held rates at 0.75% on Tuesday as expected, having cut rates 3 times already this year. So right there, we see the general picture for the Asia region not great at this point in the session. Back to you.
Thanks so much for that, Rosalind. Now, the two factors, and we're going to take them one step at a time, that are leading to this risk-off sentiment. Let's talk about the first one. US President Donald Trump has cast new doubts on the trade deal with China happening anytime soon. Speaking in London ahead of the NATO gathering of leaders, Trump signaled that he will be ready to wait another year before reaching an accord. Sarah McGregor of Bloomberg News has the details.
If there is no deal, it really does seem like these December 15 tariffs, the Trump administration sort of has to go ahead with them, if nothing else, to save face, to look like, all these threats are serious. The Trump administration it has, and it will continue to use tariffs as a way to get what it wants from a trade deal. That being said, I think we've seen a lot in the past where Trump has sort of upped the brinkmanship ahead of a sort of a deadline in talks, only to sort of agree on something or agree to delay things or move the situation forward somehow. So again, this could be part of that strategy for Trump, just to lay on the table the fact that he's not afraid to use tariffs to try and get what he wants.
What's the, risk for the president that this sort of gamesmanship or brinksmanship is going to backfire on him going into the 2020 election? Because we've seen in some of the US data, manufacturing, for example, that perhaps actually the US side is suffering a lot more than what the kind of rhetoric has been, which is that it's hitting China.
Absolutely. That being said, we've heard some commentary as of late that Trump really would be better positioned to go into the elections in 2020 with a deal on China rather than still be in the throes of a trade war, in a fight with China. It'd probably be better for him to campaign on this on deal that he's reached. But then again, if he's not going to get something from China that he promised, that he wanted, IP theft, addressing forced technology transfers, getting more purchases for U.S. farmers, it might not be much to campaign on if China isn't willing to give some concessions. So there's still a lot up in the air right now, and it does look like, if nothing else, Trump has to show that he's staying tough on China to keep that support up.
Now, the second factor, and this one ties into the first, it's that the U.S. House has overwhelmingly voted in favor of a bill to sanction Chinese officials for human rights abuses of minorities in the Xinjiang province in China. Now, China has also promised to retaliate, but has not divulged any details so far. Jody Strider and Selena Wang of Bloomberg News get you more details.
But basically, this bill, which did pass overwhelmingly in the House 407 to 1, amends a Senate bill that had also passed without objection back in August. So it's kind of ramping up now. Basically, it would sanction Chinese officials for any abuses against the Uyghur Muslim minority in Xinjiang. And basically, it gives the president fairly tough powers. It allows him to sanction these officials. Also, it allows for the U.S. to prohibit export of devices like electronic devices they think are being used to surveil that minority. So it gives pretty sweeping powers. This, of course, against this backdrop of the Hong Kong bill that passed last week, with China threatening retaliation, saying they could speed up that entities list. And we don't know what companies would be on that, but we presume companies like Federal Express, which China has mentioned in the past. So this is really ramping up things just as those trade talks are still ongoing, we think.
Yeah, Jody, let's bring in Selena at this point. Selena, we've had this response just in the last few minutes, as we said, from China saying they are going to come out with some kind of retaliation for this move, essentially. What are the details? What options do they have? And, of course, the key question is, how does this play into the trade talks?
Now, we did hear from state-backed Global Times that they could be putting some travel restrictions, visa restrictions on U.S. officials. They could also be speeding up this unreliable entities list, as Jody just mentioned. We don't know yet what companies would be on that, but U.S. companies like FedEx could be included. Now, China has been talking about this unreliable entities list since May, since Huawei was put on restrictions, so we're still waiting on details for that. But in terms of what the response could look like, China's response to the Hong Kong bill could provide some clues. The likes of Trivium Research have said that the response has been rather measured and shows that China doesn't want to totally blow up trade talks and doesn't want to combine the human rights issues with trade discussions. In response to Hong Kong, China did halt U.S. naval ships to Hong Kong ports. We also saw human rights organizations get sanctioned, but largely these are symbolic. So China really here is trying to balance showing domestic audiences that it's staying strong against foreign interference while not putting more economic pressures on the already weakening economy.
So those are the headlines that are affecting all the markets as they stand today, and likely to have a bearing on the Indian markets as well. But let's quickly take you through the headlines, the other headlines that are coming up across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We're going to start with Australia. The economy there slowed last quarter as government tax cuts failed to spur spending. GDP rose less than 0.5% from the second quarter, and that's thanks mainly to government spending and exports. Home building slowed while household spending remained weak. The report comes a day after the Reserve Bank held interest rates at 0.75%, and that's following 3 cuts since June to try to rekindle growth. President Trump has done a U-turn on NATO, switching 180 degrees from his long-running criticism to claiming credit for strengthening the alliance. He was especially focused on the level of defense spending among U.S. allies and complained that Washington bears the burden for Europe's safety. He warned NATO members that they must step up and pay their fair share.
NATO's becoming different than it was, much bigger than it was, and much stronger than it was because people are now fulfilling their commitments. There are some countries that aren't fulfilling their commitment, and those countries are going to be dealt with. Maybe I'll deal with them from a trade standpoint. Maybe I'll deal with them in a different way. I'll work something out where they have to pay. But, you know, we don't want to have people delinquent.
To the latest on oil production cuts, OPEC and its independent allies are sending mixed signals about production curbs as they prepare to meet in Vienna. Iraq has reiterated its view that the group should deepen output curbs by 400,000 barrels a day, saying it believes Saudi Arabia supports the idea. However, an earlier meeting of a committee that advises oil ministers wound up without any discussion of new restrictions. And finally, rents in prime shopping districts in Hong Kong will fall sharply next year. That's according to property agency Knight Frank. The agency predicts reductions of at least 15% for street shop spaces in key areas. This as retail sales plunge amid ongoing protests. Street-level outlets in Causeway Bay charged the highest rents in the world in the third quarter, beating New York's Fifth Avenue and Bond Street in London. Global news 24 hours a day, on air and a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, so let's turn to the Indian markets now. Agam Vakil is here to set you up for the day's trade as well as to tell you what's happening in the futures and options space. Agam, all eyes on the trade talks and the fact that there may not be a deal as early as we thought. That was the 15th of December deadline. That's having a bearing on most markets. Are we likely to get impacted as well?
Very much so, Alex. It's very evident in the SGX Nifty futures because it's indicating a decline around 32 points. But you must, always remember that it often happens that Indian markets have a way of shrugging some of these, considerations as far as the trade talk is concerned. But for now, we are expecting a negative opening. But, yesterday we saw a 0.5% cut for the Nifty. The benchmark, rather the broader markets were even weaker, and the Nifty banking indices also saw a lot more weakness. PSU banking index down by around 3%. The advanced decline ratio wasn't very encouraging. For now, we are looking at more weakness in Vedanta and Tata Motors too, specifically in this case. So none of the ADRs, at least for now, have seen any advances whatsoever. But and fund flows, of course, have once again turned, and this time FIIs have been net sellers to the tune of 1,130 odd crores, and DI is buying stock worth 964 crores on a net basis. But moving on to contributors, we did have the heavyweights such as HDFC Bank, Reliance Industries, and the L&T way down on the indices. Not too much help from HDFC or, for that matter, TCS. But let's also talk about futures and options. And it's early on in the series. We really haven't seen too much traction in futures specifically. In fact, it's still at a very low base in terms of open interest overall. The Nifty banking futures also is seeing further unwinding, which means that the base has even fallen even further. And moving on to your open interest distribution in options, not much has changed. Still a 500-point range between 12,500 on the upper end and 12,000 on the lower end. Can we see the Nifty break and stay below the 12,000? And in that case, what happens to these levels? That's the big question that will perhaps be solved. But for now, as you can see, we're already seeing, or rather starting to see, writing around the 11,800 put. This is a sign that markets may very well be ready to move maybe 100, 200 points lower, at least in the December series. You never know, things may change, but for now, that is the indication according to the options market. Now, moving on, let's talk about the VIX. It's risen by 2.5% on expected lines. The Nifty put-call ratio, again, we're coming off to around 1.3 as well. Again, I expected considering the indices came off. And, moving on to Yes Bank, it has entered into the F&O band very early on in the series. So watch out for this one. Besides that, we're also keeping an eye on Torrent Pharma, Hexaware, and Biocon. Today, Mindtree will also be in focus, considering, the management spoke to analysts out there. And in terms of stocks which are seeing unwinding, JSPL, L&T Finance Holding, and Cummins India in terms of unwinding. But as you can see, a lot of these cases are seeing a lot of longs taken earlier, now unwinding. So that's largely seems to be the case. At this point in time, it seems that traders do not want to take any positions and, in fact, are unwinding positions taken earlier as well.
Thanks so much for that, Agam. All right, let's talk about individual stocks that you need to know about. Somit Sarkar is joining me to tell you all about the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with the ICICI Bank analyst meet, which was held after nearly a decade now. And then analyst meet, the management said that the focus remains on profitable growth, return on equity growth, and partnership model. Now, they have de-risked their corporate asset book, and the focus remains on growing the core pre-provisioning operating profit. Now, the bank has also increased granular income streams across businesses, and it didn't change its existing return on equity guidance of 15% by June 2020. Lastly, it also said that they'll use technology to reduce cost, which was also the key theme across the presentations provided by ICICI Bank. Mindtree would also remain in focus because they also had an analyst meet, and the company in their analyst meet said that they have retained the entire client base following L&T takeover. Now, the attrition at the senior leadership level has been managed by the company through external hires and internal promotions. Now, the growth drivers for the company going forward include large deals, improvement in client mining and rationalization of tail accounts. Growth outlook over the next few quarters also depends on external environment. That is what the company said in the analyst meet, and they also said that the margin improvement is the core focus area at this point for Mindtree. HDFC AMC, because the promoter Standard Life Investment has proposed to sell nearly 47.5 lakh shares, that is 2.2% stake, and it also has a green shoe option to sell additional 38.5 lakh shares, that is 1.8% stake. Now the floor price for this offer for sale is around at 3,170, which is at a discount of nearly 8% to yesterday's closing price. And currently, if you see, Standard Life Investment has around 30% stake in HDFC AMC. In HDFC Life, Bajaj Finance and the company's current exposure to Karvy. Bajaj Finance in their release said that the company's current exposure to Karvy stock broking is approximately 312 crore rupees. Now the exposure was against the pledge of listed shares, and the exposure is around 0.2% of their overall asset under management and around 4.3% of the total exposure in the loan against shares portfolio. Now they have filed an appeal with SAT against the action taken by NSDL for release of pledge created by Karvy. Eris Lifesciences, because they have acquired the trademark Zomelis from Novartis for around $13 million, and Bharti Airtel would also remain in focus because the board will be meeting today to consider fundraise via debt and equity. Now, according to a PTI copy earlier, the company could raise close to $3 billion, that is 21,500 crore rupees, and the funds are primarily being raised to pay the AGR dues of the company. A couple of stocks that would remain in focus because of the bulk deals: CIAT, where India Opportunities Growth Fund has acquired nearly 4 lakh shares, and Society General was the seller, while in CG Consumer Electrical, Society General, SBI Mutual Fund, Amundi Funds were the buyers in a block deal where the promoter was the seller. Lastly, some updates from the primary market. CSB Bank will be listing today. The base price, that is the issue price, was at 195 rupees per share, and the issue was subscribed nearly 87 times.
All right, thanks so much for that, Somit. Let's take you through a BloombergQuint story now. The centre is planning to review the current compensation cess and GST rates. This comes after collections have missed their targets for several months now. That's prompted the Finance Ministry to write to states seeking their suggestions on a possible review. Nikunj Ori reports.
The government is planning a review of GST rates and compensation cess rates on various products in its effort to augment GST revenues. In a letter to state GST officials, the central government has sought suggestions from the state governments to increase GST revenues and see if GST rates and compensation cess rates can be increased on several products. This comes at a time when compensation to states has increased significantly and is unlikely to be met through the compensation cess fund, according to the letter. Remember, compensation cess is levied on sin or luxury products and is used to compensate states for any losses that they incur in first 5 years of GST's implementation. Remember, a few states had also raised concerns since they did not receive compensation for the month of August and September, and were facing financial stress because of not receiving the compensation that was due for the month of August and September. The government has also sought suggestions from the states to review if some of the items that are currently exempted under the GST regime can be looked into and GST can be levied on them, and has also sought suggestions for a review of the inverted duty structure, under which inputs are taxed at a higher rate than the finished product itself. Remember, the government is currently staring at a shortfall in GST revenues, and the gross GST revenues up to November have been 8.05 lakh crore rupees against the budgeted target of 12.17 lakh crore rupees for the current financial year.
All right, let's take you through some of the other stories you'll find on the website BloombergQuint.com. First up, Sundar Pichai is now the CEO of both Google and its parent company, that's Alphabet, as co-founders Larry Page and Sergey Brin have relinquished their roles as CEO and president. Rating agency S&P has reaffirmed India's sovereign rating of BBB with a stable outlook, according to Economic Affairs Secretary Atanu Chakraborty. In a tweet, he quoted the rating agency as saying that India's economy continues to achieve impressive long-term growth rates despite a recent deceleration. This comes weeks after another global agency, Moody's Investors Service, lowered India's rating outlook to negative from stable. All right, that's all you need to know going into trade today, but do stay tuned. There's a lot more coming up in just a short while. This is BloombergQuint.